You know, we're coming off an incredible week for the market. Some people call it the Santa Claus rally, but the fact of the matter is 7 straight weeks we've seen gains in the market averages. The Dow 3 days in a row setting records. In case you're counting, it piled on more than 1,000 points this week. In case you're looking at the NASDAQ year to date, that thing has advanced more than 40%. So the trend is the friend. We're going to look at the political impact of this in a second, but first to my buddy Kenny Polcari of Slatestone Wealth Management on what's behind all of this. What's going on here, Kenny?
So listen, Neil, first of all, the Santa Claus rally is really defined for that week in between Christmas and the 5th of January, right? So that week and a half is what's defined as the Santa Claus rally. What's happened now over the past 6 weeks is nothing short of amazing, right? Certainly it feels like a Santa Claus rally. Anyone in the market has been enjoying it. But look, they are pricing everything. Investors in the markets and algos are pricing everything to perfection. So next year's 2024 earnings outlook growing double digits at 12%, no recession, lower rates, the perfect economy. It's as if everything is priced to perfection, and that is a little bit of the risk. Now, look, I love it. I'm invested. I'm enjoying this ride, but I'm also cautious enough to realize that some of those things are not going to come true, and so the market will adjust. And besides the fact, we've gone straight up for 7 weeks. Just look at the charts. They just go straight up. There hasn't been an inch of a pullback. So some consolidation should happen. Maybe we're going to see it this week. Maybe they're going to push it right until the end of the year. We'll see. But one way or the other, don't necessarily think that trees continue to grow to the sky, because you and I both know that is not what happens.
Let's talk a little bit about what got this going. The Federal Reserve seemed to indicate not only are the rate hikes done, but the cuts are coming, maybe as many as three cuts next year. The markets, though, I look at some of these futures contracts, they're looking at double the number of cuts. But the flip side of that, Kenny, and people, for the most part, particularly those in debt or wanting to, get something that will put them in debt, like, rates to come down. Normally that happens. It's a sign of a slowing economy that one could just tip on a recession. So are we reacting properly here?
Well, so you have to be careful what you wish for, right? Because it was only, 6 weeks ago when Jay Powell told us we're not discussing rate cuts. We may be at a peak, we may raise them, but we're not discussing cuts. And then on Wednesday, he comes out and says, yeah, we started discussing cuts, which is exactly what the market wanted to hear. Now, I think you're right. Why is he suddenly discussing cuts? Do they see some difficulties on the horizon? I think they do. I don't think it's going to be a crash or anything dramatic, but I do think that they see an economy slowing. I think they're going to end up seeing unemployment spike higher than their estimate of 4.1%. And so I think they're trying to prepare. But to your point, the market is demanding more, which is why it keeps pushing higher, because I think they think the Fed is going to cave and cut more than 2 or 3 times, right? And so I think that's what investors just need to be cautious about. But one way or the other, I think you're right. Be careful when they cut rates, because look, we have unemployment still at historic lows at 3.7%. The economy is supposedly humming along, very robust. So that does not argue for the Fed to stimulate the economy by cutting rates at this moment, at least not in my mind and not in a lot of other minds. But one way or the other, it looks as if that's what they're going to do starting in, whether it's May. I don't think it's going to be in March. And by the way, Johnny Williams came out on Friday, New York Fed chair, and said, oh, by the way, it's really not what he meant. I think because he thought the market was getting carried away with itself and thought we were going to have multiple rate cuts in 2024. And they're trying to, walk that back a little bit. I'd just be cautious.
Yeah, you're talking about the New York Fed president. And by the way, the Atlanta Fed president was saying much the same thing, that don't think these cuts are that imminent. But you're right. There's a lot of confusion there. But well explained. Kenny, I always enjoy having you. Merry Christmas, my friend. Thank you.
Merry Christmas to you.
I'm Steve Doocy.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.